we're now going to move on to the rather more mundane question of the private equity and venture capital industry. Thank you very much indeed, Matt, and it's my great pleasure to introduce our first industry speaker, Mr. Matthew Brockman of HG, to discuss defining a strategy and managing across stages. Matt.
Thank you. I say it does feel a bit intimidating following a guy who's basically got to digitize the NHS within the next 3 or 4 years to now go and talk about the mundane matter of setting strategy in a private equity fund, but I'll give it my best shot. I was really going to cover the topic of how we thought about setting strategy at our firm, what are some of the trade-offs we made, and then particularly one of the things that Tim asked me to focus on more than anything else was operationally how we tried to execute that. So I'm going to spend 10, 15 minutes on that. Obviously, I'm around during the rest of the day, so please catch me if you want to follow up on some of the topics. To add some sort of colour to that, I thought it was worth just stepping back briefly and thinking about how many sort of evolutions the industry's gone through, right? It's very interesting to think that the BVCA has been around for 35 years. And I really think about 4 sort of evolutionary steps in terms of how private equity firms have operated, certainly in the UK, but frankly globally during that period. I'm going to see if this clicks through okay. Point it right, there we go. First step, I think, was really in the 90s, right? Forming industry, pioneering, small partnerships, lots of founders. Many of us in the room weren't even close to the industry at this point. Many of us may even been born at that point. But you have this history of how the industry started to grow, really in that early 90s. And many of the founders of those firms obviously now retired and no longer in the industry. I think you then end up in the version 2, which is really, I think, in the sort of early mid-2000s. That's when a lot of the guys now running the firms in the industry sort of cut their teeth. So it's interesting to think about, my experience. I joined Apax in 2000. So my experience was really that initial buyout boom, right? The presence of leverage, the growth of funds very materially, the performance that came off those funds, some of the downturn that then happened for 2008, some of the arguable overexpansion that happened in that period. And I'd say it's interesting to think that most of the people managing and running a bunch of these funds now are people who learned their sort of the early part of their industry experience in that sort of investment period. The third area, I think, then goes on to how do you adapt firms to specialization? And this was a trend that sort of carried on through that period, but which is, I think, sustained onwards, which is a lot of this is around sector teams. So can we build a group of sector teams under a portfolio, under a firm banner? Can we start thinking about some of the operational team capability? And so you see firms segmenting into these kind of sector teams. You see more of this theme around, can I build some degree of operational capability? Small teams of operating professionals impacting the portfolio companies we buy, but really a heavy focus and a heavy bias still on investment, and investment skill, and investment talent being the driver of how these firms operate. And that's really, I think, where a lot of the sort of most leading firms have been in the last few years, really up until the last 2 or 3 years. But what you're seeing now, I think, is a sort of 4th stage evolving. And this is much more focused, almost like an industry scale. Real depth in particular sectors, real scale players, sort of a PE firm that's looking like a large corporate in an end market, where the balance and the value of PE structures, so incentives, alignment, balance sheet management, some of the stuff that makes our industry work, the economic returns work, but put that alongside the value of really significant scale into main vertical markets. And we'll come on to this, but it also means, I think, the balance of the organization shifts. The balance of your team composition between how many people are investors and how many people worry about deals and deal activity versus the portfolio and the depth and the growth of those companies. And the bias of that shift is also, I think, relatively evident. Now, the question you might ask is, really, like, what's the evidence? How do you see this? What's your inputs in terms of how you think about that evolution happening? And I'm going to just draw your attention to sort of 3 things that we focused on as we thought about our own strategy, and I'll come on to then how we apply this to HG in a second. The first is some of the industry work. This is a report, those of you who do software investing, which obviously we do a lot of, but this was a study from last year from BCG, which looked at returns in software. And software as an investment category in buyouts has seen a huge growth. It's basically doubled that market space in terms of the amount of money that's gone into software buyouts in the last 10 years. And what BCG were looking for was software buyouts, by the way, on average, are about market. They do about 1 or 2 of IRR more than market, general buyout activity. But you've seen some very exceptional performers. You've seen some funds that have done exceptionally well in this market space. And what BCG were looking for was, what are the drivers of that? How do you think about that, the inputs to that? And it really came down to specialization, right? Their key output was firms that have done 10 or more software deals. A very substantial amount of your fund is committed to software, right? So this is real specialization. This is very deep. And it goes to the value creation. It's playbooks, it's mechanisms of growing these firms. You can start to analyze. People, obviously, I can send this through, or people can find this very easily. But the interesting impact is it's about 15 to 20% points of IRR that they are locking onto as being the result of that outperformance. And so the value of that depth of focus, we think, is huge. Second area I focus on is feedback from some of you. So this is a quote from one of our LPs, one of the may or may not be in the room. But it's basically saying, we think winning private equity firms in the future are very deeply entrenched and differentiated. The depth of that industry expertise just goes beyond, I think, sector teams. And these end up looking like large public companies. These look up like large players in their industry and in their vertical. And we see the power of that network and the power of that scale and the value of that being really important in terms of how we think about what we're doing. Third example is just what you see happening in the market. I mean, I find it fascinating that, I said many of you saw this deal go through, but Jab bought Pret-a-Manger from Bridgepoint. This is a very concerted effort to basically own a consumer goods categories, right? These guys have invested $53 billion in the last 6 years on 14 deals to basically sell up the coffee market and a bunch of other markets. And they're raising money from a family, from family offices, which is a lot of where we would raise our money from, but they're also getting institutional money from the US, from Singapore, from other places. And so this idea of building very significant scale, using a lot of the tools and mechanisms that we as private equity practitioners would use, use of leverage, use of incentives, use of these kind of structures, but to really, really try and get massive scale in particular markets. It's a very interesting theme, and there are more than one example. This is just the one that caught my eye because it was in the FT about 2 weeks ago. But again, just thinking through, what does that mean? And what does that mean in terms of how the industry is evolving and the level of focus that's resulting from that? I'll just flick you on to what does that mean for HG and how we thought about it. I'm going to pick up on 4 points. First thing is, to pursue that kind of strategy, and that's clearly what we are doing, and I'll come on to that, you do need a strategy. This is not an investment strategy. It's not a fund strategy. It's a corporate strategy. What is your company going to stand for? How are you going to differentiate yourself? Not easy to do this. We've been through the pain. There's a fantastic article, if you're ever interested, maybe you are. There's a 2008 article from the Harvard Business Review about how do you set your strategy in 35 words. And you can see the quote below, which is, most companies find this extremely difficult to do. Most private equity firms, I expect, find this extremely difficult to do. A lot of our portfolio companies find this extremely difficult to do. How do you really bake down the thing that makes you differentiated and makes you special versus everybody else in the market? Tim said there's 747 members of the BVCA, right? There's 300 and something private equity firms. How do you what's your thing within that makes you different, that you're going to build on? So we went through this process, and we tried to define both a mission, and you can see this all over our website. You can see this about how we communicate to entrepreneurs, to the management teams we back, to try and give us a sense of what it is we care about and what it is we do. And then we also try to create a 35-word strategy. Some of you that are RLPs will get this, frankly, in spades in the next few months. But we've made a very deliberate choice on saying exactly what is it we do, how do we differentiate versus what we think other people could do, how do we continue to build and define that. I won't go this now, but you can get a sense of, sort of some of the careful choices of words that go into a statement like that really define. And then the implication of that is how do you get your entire organization to act and follow that core strategy. The second thing that we thought about is how can we use our fund architecture to support that corporate strategy? If you looked at the firm 10 years ago, you'd seen a mid-market firm that was doing buyouts across 4, 5, 6 sectors. These days, we have 3 funds. We only did technology and services. You saw that on the previous page. We have 3 funds. They're all buyout funds, but it very, very deliberately mapped to the maturity of companies in our sector. So the bunch of the companies that Matt just talked about in healthcare tech, I'll go and show you a couple that are actually serving the NHS. But that's a very core vertical for us. And those are all businesses in that 100, 200, 300 million enterprise value zone. That's naturally where our Mercury fund sits. We then have a mid-market fund, which deals with companies that are now worth 250, 500, 750, where they're material in a market, they have market position, they have RMS, but now how do I think about further scale? How do I think about adjacent markets? How do I think about that growth? And then recently we've added a Sutton Fund, which allows us to continue to be invested in technology companies, software companies that have gone through that and are now very significant in their market and are worth $1 billion, $1.5 billion, $2 billion. So this is a deliberate architecture that allows us to put individual fund investments together, but also allows us to be really quite pervasive up and down the size of software companies in Western Europe. And it also goes a step further, which is we then also focus on making sure that we keep a significant volume of activity in some of the applications. These are all software and technology and services companies, right? So we're not in the healthcare industry per se. We're not building care homes. But what we are doing is doing repeat investments into healthcare technology that really builds domain knowledge. So Allocate Software, which is on that bottom left, is an example that Matt could have quoted. We roster about 80% of all nurses in the UK, and doctors and anaesthetists and clinicians and everyone else. That is a very, very fundamental key piece of software to allow the entire healthcare industry to operate. We invested about 6 months ago in a business called Medifox in Germany, which basically does the same thing in primary care, which gets nurses, gets doctors, gets people into the right place. So again, how we're leveraging that theme, leveraging that knowledge base, how do we keep reusing that? How do we keep going back and reusing the depth and that focus of that to our advantage? And then the final piece, and I mentioned this very briefly before, which is just the depth of sort of investment that we're committing in the operational capability. We have a very large, this is not everybody in our ops team, this is just to give you a sense of some of the people in our operational support team. It's a very large team. We committed very materially to it. You can see various capabilities there across marketing, sales, operational leadership, strategic input, HR, but they're all people who built technology and software companies. And I say that's a representation of the people we have. It's not only the people we have. So our balance of our team is more roughly half and half between people who are really helping these companies scale. Because we're buying companies that are trying to grow quite quickly, right? A bunch of this is around the operational capability developing these companies alongside the investment team, alongside the investment activity. Very simply as well, we wouldn't have a clue how to buy a consumer company, right? We wouldn't know how to buy Pret because we haven't got anybody on our bench, anybody expertise, nothing in our industry, in what we're doing says we could buy a consumer company. So again, very, very clear on how do we foster and can keep that very, very straight discipline on what it is we're focused about. So the final sort of manifestation of this is how do we think about benchmarking ourselves? How do we think about competing? And we obviously do benchmark ourselves on our funds, right? Ultimately, we raise money from LPs, and you want to make sure that we're delivering returns commensurate with the risk we're taking and with the investment strategy that we're outlining. So clearly, there is a fund and fund performance overlay. But we also spend time thinking about this chart, which is the relative size of what we do in European software. So if you aggregate, I realize you're reading this for the first time, if you look at the revenue base of our investment portfolio, we're the third largest software company in Europe. So we have 4.2 billion of revenue, and we're growing at 20%. SAP is obviously a behemoth in ERP, mainly based out of the US, in fact. But we kept it on there because of its European heritage in Germany. But we have a very, very, very large position in European software. And so continuing that scale, continuing that investment behind that level of sort of industrial reach, that industrial scale, brings me right back to where I think the future of the industry is going. Thank you.